we've been keeping close tabs on this Libya story. Yesterday we were on the show talking about even though there had been oil disruption, we weren't seeing much of an impact on the price of oil. And then it emerged yesterday on back of this Bloomberg interview that our colleague conducted that there may be a resolution in sight. So maybe let's just start with Libya and the developments there and what it could mean for oil production.
Yeah, good morning. Well, that would be bringing back about 500,000 barrels a day of oil that's been taken off the market already because of that impasse. That's a political impasse over the central bank, which led one of the two governments in Libya to order production and exports halted. So that's a big drop in oil in the market. Libya produces about 1 million barrels a day. About half that is off now, and it's kind of a moving target as well as fields come up and down. So it's very uncertain. And we hadn't seen much of a jump in the market. Markets even were very steady because they're really focused on the demand issue. So even with that uncertainty in Libya, as I said, Libya goes up and down, so it's really hard for the market to take a gauge on that. Even with that, we didn't see that jump up, but when we did hear that news that they could be close to a resolution, that was enough to bring those fears back and bring oil down in the market.
Yeah, the question investors always have is what was the trigger? Why did we get that 5% sell-off yesterday? It could be this news. It could be just a combination of factors. But for me, it seems that Chinese PMI figure that came out earlier in the week was also a major catalyst for the downward pressure on oil.
Yeah, there are a lot of big things that are holding oil back, a lot of different factors that are weighing on it. And as we said, that Libyan thing wasn't enough to break through that bad news when it was looking like it was coming off the market. And that's because of weak Chinese demand, which has been a concern throughout. People are looking at the weakness in the construction sector, the weakness in demand and refining there. On top of that, we saw some weaker manufacturing data out of the United States. So if you're looking at the two biggest economies having weakness, China already being weak, and then looking at those potential recession fears coming back again. Now we'll see if that's borne out, obviously, in the United States. But that was enough to kind of spark that concern in oil markets.
And we haven't even talked about OPEC, OPEC Plus yet. WTI is trading below 70. We're at $69. Brent is way through that $80 level that we thought was the sort of soft level that OPEC Plus were hoping to achieve. How are the market moves likely to influence what they do in Q4?
Yeah, for sure. When we spoke yesterday, I would have told you that markets looked pretty much okay for OPEC. They were within shouting distance still of that 80. Yeah, exactly. But what a change today does, of course, OPEC is also looking through the daily moves as well. So they're probably looking kind of at a year average. But when they look forward to what's going on, if they do see that weakness in the market, if they do bring back that oil into the market, a lot of the analysts and investment houses are forecasting a surplus of oil already towards the end of this year and then increasing into next year. So a surplus means oil building up in storage, which is what OPEC doesn't like, and that weighs on the price. So these factors are going to be playing into OPEC. Clearly, we haven't seen any announcements from them, so that would mean that June agreement to start rolling back some of those voluntary cuts in October, that still stands at the moment.